It's Tuesday morning, and after 2 sessions of cooling off from last week's rally, Opendoor stock is setting up for what could be another key day in its ongoing transformation story. We closed Monday at $8.20 a share, down about 7% from Friday, and then the aftermarket drifted a few cents lower. But the broader context matters far more than the day-to-day ticks. Last week we watched Opendoor surge from the mid-$7 range to over $9 a share on the back of renewed housing market optimism and the stunning disclosure that Jane Street, one of the world's most sophisticated quantitative trading firms, had quietly accumulated a 5% stake. Since then, the stock has simply been digesting those gains. The question now is whether this pause sets up another push higher, and when you look at the fundamentals of the story, the social media buzz, and the product pipeline, the pieces are aligning for a potentially bullish Tuesday. When we talk about Jane Street's involvement, we're not talking about a random hedge fund taking a flyer on a meme stock. Jane Street is a $140 billion powerhouse that handles roughly 10% of North American equity trading. They're famous for their ultra-fast algorithms, their ability to price risk in microseconds, and their secrecy. They don't manage outside money. They trade their own capital. So when they file a 13G showing that they've taken a 44 million share stake in Opendoor, it's not because they're looking for a quick flip. They're signaling that their data-driven models see a favorable risk-reward profile in Opendoor's business model. And the timing couldn't be more telling. Access Industries, which had been a large holder since the dark days when Opendoor traded below $1, exited with a 12 million share sale. The new money stepping in is not distressed, it's calculated. That's a vote of confidence from a player that thrives on asymmetric opportunities. This rotation of holders is part of a broader maturation of Opendoor's shareholder base. Early believers who came in during the SPAC mania or the 50-cent lows have either been shaken out or are locking in profits. The buyers stepping in now are quant shops, retail traders who've lived through the pain and still believe, and high-net-worth individuals who are watching the real estate tech space as it consolidates. That mix creates a healthier backdrop for the stock to build a base and potentially climb again. People forget that Opendoor at its peak traded well above $30. Even at $9 a share today, the upside potential is enormous if the company executes on its new vision. Execution is where CEO Kaz Nejatian has been drawing a clear line. Since taking the helm, Kaz has made transparency a priority, sharing memos on X, teasing product launches, and openly stating that Opendoor is moving to an in-office culture to increase speed and collaboration. Monday was the first official in-office day for the company. That's more than just a cultural shift. In the tech world, bringing people back into the office signals a commitment to shipping faster and cutting fat. Combined with the internal AI tools Kaz has been deploying, like the Opendoor Assistant built on LibreChat, this push positions the company to do more with less. Organic headcount efficiency is a polite way of saying they can scale without bloating costs. For investors, that's bullish. It's Keith Rabois and Eric Jackson's vision of a lean, high-talent operator coming to life. And speaking of Keith Rabois, let's not underestimate what his return as chairman means. Monday's buzz on X about a photo of Rabois with Donald Trump is a reminder of just how connected he is, not only in Silicon Valley but also in political circles. Rabois is a member of the original PayPal Mafia alongside Elon Musk, Peter Thiel, and others. These are people who built billion-dollar companies from scratch and still influence capital flows across tech, finance, and government. Having someone of his clout steering Opendoor sends a message to potential hires, partners, and investors. This is no longer a house-flipping experiment, it's a technology company with heavyweight backers and ambitions. In the last few days, Kaz has hinted on X about insanely awesome talent joining from big tech companies because they believe in Opendoor's mission of making home ownership matter. That's the kind of insider buzz that usually precedes breakthroughs. This is also where the retail narrative and the institutional narrative converge. Eric Jackson, who has been one of Opendoor's loudest advocates on social media, spent the weekend posting outside Drake's house in Europe talking about retail traders as a rising dynasty. His message resonates. Middle-class investors who are tired of soft ETF strategies and high fees are looking for one or two breakout plays to change their financial trajectory. Opendoor, along with names like BETR, CIFR, and IREN, is part of that shortlist. That passion has kept the OpenArmy engaged through the volatility. Jackson's latest anecdotes about Drake's manager following the story and Drake's head of security buying Opendoor and BETR stocks might seem like fluff, but they reinforce the sense that the story is spreading beyond the usual circles. Celebrity interest can be a powerful accelerant in today's meme-driven markets. At the same time, mainstream media is starting to shift its tone. You noticed a Motley Fool article naming Opendoor as a potential growth stock to watch. That's a big deal. For years, the media narrative has been Opendoor the risky iBuyer, Opendoor the house flipper with thin margins. Reframing it as a growth company signals that analysts and writers are beginning to understand Kaz's pivot to a platform model. The forthcoming buyer-side product launch, which Kaz has said is 90% likely to debut in one market next week, likely Texas, is a cornerstone of that pivot. Moving from a seller-only platform to a buyer-seller ecosystem transforms Opendoor into something closer to Zillow with instant transaction capability. That means more data, more engagement, and more opportunities to monetize well before customers are ready to sell. If you think about the psychology of this moment, it's classic accumulation. We had a powerful rally fueled by new information and institutional buying. Then we had 2 days of cooling off as traders took profits. Now we're heading into Tuesday with the stock still well above where it started last week, institutional support in place, retail sentiment hardening, and a major product catalyst looming. People who thought $10 was a good entry point a few months ago are now looking at $8 to $9 and seeing a bargain. Shorts who piled and expecting a collapse to zero may find themselves squeezed if momentum swings back. Jane Street's models don't chase hype, they anticipate risk, reward shifts. Their stake suggests they see asymmetric upside from here. Another underappreciated factor is macro tailwinds. August new home sales were up more than 20% year-over-year. Median home prices remain high. This environment supports Opendoor's margins and transaction volumes. If the buyer-side product succeeds in Texas, it could position Opendoor to capture not just a transaction but the browsing and dreaming phase of the customer journey. Imagine millions of people window shopping homes on an Opendoor app with algorithmic feeds, AI-enhanced images, and integrated offers. That's not just an iBuyer, it's a real estate social platform. And as you saw in the thread Kaz replied to, the code for such a pivot is mostly written. So as we head into Tuesday's pre-market, the story is less about Monday's 61-cent dip and more about the foundation being laid for the next leg of the journey. We have Keith Rabois connections reminding investors that heavyweight networks are in play. We have Kaz Nejatian executing a cultural shift towards speed and transparency. We have Jane Street stake as a quant seal of approval. We have mainstream media softening its stance. And we have a major product launch likely just days away. That's a lot of positive asymmetry lining up at once. For the OpenArmy, this is a moment to remember why you're here. Volatility is par for the course in any high-growth story. The best opportunities rarely move up in a straight line. They lurch forward, consolidate, and then surprise. When you combine strong leadership, institutional buying, retail conviction, and a macro backdrop that favors your sector, you've got the ingredients for a breakout. Tuesday could be the start of that next phase. Of course, nothing is guaranteed. Markets can stay irrational. News can shift quickly. But if you step back from the one-day candles and look at the narrative arc, Opendoor is transforming from a house-flipping curiosity into a tech-enabled real estate platform with political connections, celebrity buzz, institutional support, and a product roadmap designed to capture customers earlier and keep them longer. That's a fundamentally different company than the one that languished under its old board with soft projections. And it's that difference that Jane Street, Eric Jackson, Keith Rabois, and retail investors alike are betting on. So as you're watching the tape today, don't just focus on whether we're up 30 cents or down 20 cents in the pre-market. Watch for signs of renewed buying interest. Watch social media for hints about the Texas launch. Watch for any new hires Kaz teases. And pay attention to the subtle shift in sentiment from skepticism to curiosity to optimism. That's how bottoms form and rallies begin. The stock has cooled for 2 days. The stage is set. Let's see what Tuesday brings. And to the OpenArmy, well done for weathering the storm. It's been a volatile ride, but the story is still intact. With institutional heavyweights on board, leadership signaling speed and transparency, and a major product launch just ahead, the risk-reward balance looks as attractive as it's been in months. Stay informed, stay disciplined, and remember why you're here. Open not just to the moon, open to the future of real estate.